A stellar week on Wall Street as we've received mild inflation data along with blockbuster earnings. Will the good times last? Well, right now, we do think so. We have a very special guest with us today who is actually on the optimistic side as well, but we're going to question him and see if this bull run is going to continue to run. Welcome, everyone, to Buy, Hold, Sell. I'm your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona.
Not just hot, scalding hot, okay?
Oh, I know it's scalding hot. I saw it on the Drudge Report, and it's just boiling hot out there, and it doesn't look like it's going to end anytime soon. But you know what is hot is this stock market, Toby. I got to tell you, it continues to rally, and you could say whatever you want, that we're in a bubble or whatever it is, but right now the good times are here. So let me get to our featured guest right now. Out of Bryn Mawr, Pennsylvania, just outside of Philadelphia, we have Rhys Williams. He is the chief strategist for Spouting Rock Asset Management. Welcome to Buy, Hold, Sell, Rhys.
Thank you for having me.
Well, I got to tell you, I've seen you in the press lately, and your comments have been great. You've been spot on with everything you've been saying. But what do you think about this market? We started off the second half with a lot of people were head scratching, maybe thinking, okay, the first half was just it. That was it for the year. But right now, this week, good times are lasting. What do you think?
Yeah, obviously, this is probably not the time to get extremely aggressive given the run we've had. But I still think the bulls are in charge here in the short to medium term. And I don't see what derails this in the next week or two or three. Given the underlying momentum in the market and given that it's broadening out, it's not just the Magnificent Seven tech stocks that really powered us from the end of January until the middle of June.
Yeah, well, I got to tell you with Toby real quick, though. I mean, like today, we woke up this morning, we saw the movement with the JP Morgan numbers coming out. Wells had a good report, Citibank as well, and it really moved the needle for the bulls. I know we had a little bit of selling in the afternoon, but it's probably from traders just taking those profits and headed to the beach a little bit early. But Toby, I mean, we've talked about this past few months now. I mean, we could talk about all the headwinds. It doesn't seem to matter.
Well, what's so interesting, first off, it was easier to call the bull market when everybody was bearish, Todd. I mean, I've never seen that many. God bless some of our friends who we've had on, Mr. Rosenberg in particular, that will use a lot of data to try to make the case of overvaluation, but when you're in a situation like this, which I've said 156 times, that there is no rule book for the post-pandemic, post-Russian invasion, 22 times higher interest rate market. We've just never been here. So then I think the only thing that you can really count on is price tells you direction, and momentum and breadth tells you where the market is going. And then you add on top of this is that clearly, if the Fed raising rates, and certainly remember in 2022, I mean, some of the Magnificent Seven were the Magnificent down 50%. So part of the Magnificent Seven thing, beyond just AI relevance, I truly just think is that being priced for not being, the rates have already been priced in. So they had to just come back 30 or 40% just to get back to an even valuation. That's a rebound effect. And I've seen that over the last 30 years multiple times. But the killer one here is that we now know that if you look at the forward indicator, remember the Fed has always been fixated on the stuff in the past, the stuff that's already happened. But the leading indicator, PPI, came out, the producer index, and when PPI goes down, that means prices for goods go down, and that makes the case that the Fed is done in July. And then what are you going to do? First off, we are buying bonds, Rhys, by the way. We're starting to buy mortgage REITs. We're starting to buy, rate sensitive investments that pay very high dividends and increase in value when rates come down. Because I'm now betting, and I think a fair amount of strategists are betting, that we've sort of hit peak interest rates here. And oh, by the way, the dollar is telling us something. Gold is telling us something. I'd love to hear what you have to say on that, Rhys, because the gold price issue and silver were long because the dollar's coming down. I mean, it's like all the classic things are happening at the same time.
Yeah, I couldn't agree more. I mean, I do think you're right that bonds have probably peaked, maybe last week, and that was a good opportunity. Bonds, by the way, have not been great this year.
Yeah, no.
You know, they've actually, the coupon is kind of nice for the first time in 15 years, but other than that, it's been 3 yards in a cloud of dust, and you've lost a little bit in terms of the bond price. So yeah, I think that should be fine. I kind of agree that the Fed should be done after the July rate hike. I do think that, however, they might hike more. I mean, there does seem to be more consensus on the Fed to raise rates than there is from the rest of us. So I don't have the confidence to say that they absolutely won't raise after July. They might very well. And I do think that's the major risk to the market. Where we could all be wrong is they keep tightening because they don't see the real slowdown yet, and then that, you know, you go off the cliff, and that is the risk, because I think even the Fed recognizes there is the long and variable lags of monetary policy, and we'll have increasing tightening effects even if they don't do anything over the next 3 to 6 months.
Yeah, you know, Rhys, I was thinking, I got to know Chairman Powell years and years ago. And first off, I mean, people need to remember that, like, you know, he's an Ivy League kid, but his Ivy League degree is in history. His undergraduate, right? And as a historian, you know, I'm sure he is scared to death of being the Arthur Burns, you know, of the 21st century, where he let inflation get away, and he wants to be Volcker. But I will tell you, my 30 years in Washington, D.C. taught me that when you're coming to a presidential cycle, then, you know, people say that the Fed is not political, which is complete horseshit. And you're going to see, that's why another reason why I say that once we get, maybe if remember, the shelter costs, the owner's equivalent rent is like 42% of the CPE. And those prices just hit an epic last year, October 22nd. That was their highest, you know, year over year raise. As we get into October, they're going to start coming down just year over year. And that means that inflation has to come down because it's such a big part of it. And then transportation, Lord knows. Have you gone out to buy a new car, Todd, recently? Oh, no. My Lord.
It's crazy, you know, huh?
It's $5,000 over ask. And if you don't say yes, then someone's going to get. On the other hand, used cars prices are come down. And so, so you're getting all the formula to see a steady decline in the CPE, which is, of course, what the consumer price expenditures is, what the Fed looks at. So I just think there's no rationale to keep raising rates when they know better than anyone that we're coming into this part where also, did you see the Wall Street Journal today on the top 20 metropolitan areas in the United States where prices and home prices are coming down? Shockingly, San Francisco is number one at 10%. It's hard to believe no one wants to live with people crapping on your yard and low. But you know, so we're in this downward slope, and the year over year comparisons, you know, get pretty tasty.
So, Rhys, I have that. Here's my question for you. You've had over 500 basis points in rate increases, and it really hasn't done anything to the markets. We're expecting this time bomb to go off that's going to truly impact the economy, and it hasn't happened. Amazon Prime announced their best sales ever for Amazon Prime Day. I mean, people are still spending money. Jamie Dimon said it today. I mean, people might not have as much money, but they do have money and they're still continuing to spend. So the economy continues to roll on. Does it really matter if the Fed hikes rates 1, 2, 3 more times? Because right now it doesn't, Wall Street doesn't seem to care.
Yeah, I mean, I think the reason why spending stays so strong is the upper 50% is spending money.
No question.
And that's really important for the publicly traded stocks, because it's the upper 50% that drive a lot of discretionary purchases. But if you look kind of below the surface, there are signs that things are slowing. I mean, boat demand is down and RV demand is down, and you know, people are not being quite as flush. Leslie's just announced a really bad sales number.
True.
That's it's 130 degrees in Scottsdale today. I mean, it's you would think that everybody would not skimp on the chemicals this year. So,
Toby's really reporting from the pool.
Yeah, right.
But I do think that you know, there are signs that the consumer is not blowing and going at all, but the upper is so strong. And then you had the latent effect from not traveling for a couple of years. So people are hitting the credit card to go to Europe and go wherever.
Todd, I just add to Rhys's point here. I know for a fact, because I have thousands and thousands of subscribers who ask me these questions. Most people in the United States do not understand that the top 20% of households account for 45% of all spending. But on discretionary, the top 20% are responsible for more than 60%. And, the wealth effect still works, baby. People were hunkered down last year with their the QQQ, which is all anybody seems to own, which I can't blame. But, they're down 30%. Man, maybe we're not going to go to, the Positano this year, blah, blah, blah. Now we're reverse wealth effect, number one. Number two, I guarantee you that most people in the United States do not understand that about 65 million people get a Social Security check every week. And over the last, every month. And over the last 18 months, will have increased 11 or 12% the payout. So there's a floor on the spending for the bottom, and there's essentially no floor, because you know what? It's really strange, Todd. When your checking account has two commas, what do I care whether I spend $4,000 on something? When your checking account does not have a comma, you care a lot. And right now, the average checking account for the top 20%, I just looked up, is about $18,000. So I don't care. I just bought a car. I just wrote a check.
Look at you.
It's a different world. It's just a different world. And if you don't live in it, you don't understand it, or you don't appreciate it.
Well, you wrote a check for that limousine, so that's fantastic.
No, it's the Rolls Royce E-car. Do you see that? That's what I want.
There you go. With
some of the late model, some of the older used cars, that's harder to get done. It's harder to finance. There's an increase in repossessions. You are seeing some signs of stress, but not alarming. It doesn't feel like 08 at all. I mean, nothing close. So
well, I remember too that the average car payment now is over $1,000 in the United States, which blows me away. And I would offer that there are, the repossessions are happening to people who had no business being approved for $1,000 a month mortgage or payment, and most of those payments are for Ford 150s and
F-150,
F-150s, right? So I'm at the edges, but the marginal buyer, right? The person who's the price insensitive buyer is dead right. The marginal buyer in the United States is the top 20%. And, even going down to the, $100,000 household. The average income per household is about $76,000 right now. The average top 40% is about 115. The top for 20 is near 200,000. And so we have a very large price insensitive group that spends money like crazy. And if you look at my Facebook page, Todd, everybody's in freaking Europe or
I love your Facebook page. You comment a lot about TV as well. That's always good.
Crimea, they're in Herzegovina. Nobody's in town.
There you go.
They're in Crimea, but
well, let's close it out on the block right there, guys. We clearly have the experts right here with us today, and we are giving you all the knowledge that you need to know on from market action this week and what to look forward to over the next few weeks. So joining us again today is Rhys Williams. He is the chief strategist over at Spouting Rock Asset Management in Bryn Mawr, Pennsylvania, which I think is the lacrosse hotbed of the entire state of Pennsylvania. But that's another topic. That's another topic for another time. So coming up after the break, we're going to get into more about the markets and also earnings period. We have a big Goldman Sachs number coming out next week. I want to get Rhys's opinion on that as well. So please stay with us. We'll be right back after the break.
Buy, hold, sell, brought to you by Crosscheck Management.
Let's talk about today when we go topics.
Roll it down.
I am.
You don't need a car to listen to Sirius XM. You can listen anywhere. You know that, right?
What? Kevin Hart's Laugh Out Loud Radio.
Kevin, you could use your phone.
What?
Alexa, play Kevin Hart's Laugh Out Loud Radio on Sirius XM.
What?
This is how I know you're getting old. I guess that was it.
What?
In a world where secrets have consequences and lies can't be hidden forever, Immerse yourself in the gripping new thriller No Lie Lives Forever by Todd M. Schoenberger. Join Wall Street hedge fund manager Travis Carmichael as he delves deeper into a web of corruption and conspiracy, finding himself entangled in a high-stakes game where souls are at stake, and trust is a luxury he can't afford. Critics and readers can't get enough of this heart-pounding page-turner, calling it a masterfully crafted suspense novel that will leave you breathless. No Lie Lives Forever is a masterfully crafted thriller that will leave you guessing until the very end. With its intricate plot twists and unforgettable characters, this is a must-read for fans of suspense and mystery. From the mind of acclaimed author Todd M. Schoenberger comes a novel that will challenge your perceptions and keep you turning the pages late into the night. Critics and readers alike can't get enough of No Lie Lives Forever. It's been hailed as a gripping roller coaster ride, a true page-turner that will leave you breathless. Don't miss your chance to uncover the truth. Immerse yourself in the suspenseful world of No Lie Lives Forever by Todd M. Schoenberger. Available now on Amazon and at finer bookstores near you.
Welcome back to Buy, Hold, Sell, where our special guest today is Rhys Williams. He's the chief strategist at Spouting Rock Asset Management in Bryn Mawr, Pennsylvania. And Rhys, what we were talking about in the last block was really all the optimistic things that are taking place, despite maybe the headwinds that you keep hearing about or reading about in the financial media. But what are the pitfalls? Because investors right now, we have that fear of missing out. People are jumping in. They're maxing out their 401k contributions. Now you have really novice investors that are talking about it. And that's usually the tipping point when you have to start thinking we might be on the verge of a sell-off. But what are the pitfalls that everybody needs to worry about this summer?
Well, I think the biggest is that the Fed keeps going and we're not one and done in July, because I do think the tightening is going to keep coming through the system. And it's just unclear how bad it gets. There's also a geopolitical risk that sort of is very much in the back burner, but you still have a very live war going on in Crimea and in the Ukraine. And then the idea that right now it appears that China and the US want to make nice, and it would make kind of no sense for the Chinese to invade Taiwan tomorrow, because there's an election next year in Taiwan, and there's a chance that a more pro-Chinese government gets elected, and one that wants to do business basically with China, as opposed to, will campaign a lot aggressively for independence. So it would make sense for China to do nothing, but there's certainly a risk out there that something heats up geopolitically.
Yeah, I mean, Todd, the proverbial black swan, very interesting. I have this research network of about 1,200 people around the world. And I remember distinctly getting this text saying, Toby, the Micron DRAM plants in China have all closed down because people have this COVID's real. And that was like January 15th. And I was like, I don't know, Todd. The guy's name is Todd. Okay. And then he sends me a picture of the thing closed down. Same thing. We have a guy in the CIA who sent us a note here saying that Russia's going to invade on February 22nd to the date. And this was like in January, right? And I'm like, I don't know, he gets it right. I'm waiting for the text, Todd, from the people around the world that say, here's what you don't know. Here's the black swan you don't know about.
Yeah.
Because we're you could say we're priced to perfection. And obviously, if you overlay the earnings per share increase that a large company will get from artificial intelligence, even the generative AI, they're just, you know how you do when you get a mania. People are pricing that out like 5 years ahead. You're not going to see the earnings per share growth here, except for certain companies like NVIDIA, like SRIC, CLR, companies that are making those giant boxes that you put all those chips into. They're making a killing right now. But in general, what I'm worried about is, first off, when Goldman Sachs comes out next week, they're going to have the worst quarter you've ever seen, because I think they closed maybe one investment banking deal. I mean, I saw them, they were talking with a friend of mine who's a small cap company that raised $18 million for Goldman Sachs, raising $18 million. I mean, come on.
Yeah.
I mean,
yeah.
So that lake has dried up.
But Goldman though, they could be doing the under promise over deliver method here as well. We just don't know. But yes, you are right. The forecast is supposed to be a very weak earnings period. And when they release earnings on Wednesday, it's not supposed to be that great. However, Goldman, I mean, it could be a strategy.
Yeah, well, look at the Rhys. What gets me here is, for instance, it's again, you got to think year over year increase, decrease. The price of airline fuel is down about 28% from what it was before, and the prices are up 20%. Well, geez, who hit the 52-week high this week? In home building, everybody around here has got a 2.4% mortgage. Are they going to sell that $2 million house to buy another $2 million house with a 6.6%? No. But if they're going to buy a new house, they're going to go to one of the big home builders, and they're going to say, great, I want that $2 million house, but you're going to buy down that mortgage for the next 5 years for me at 2.2. So home building, finally off the chart again. So there's cause and effect in the economy that is sort of at the micro level, not at the macro level. At the macro level, 60% of the rest of the world spends their money on paying their debt, not on education, not on healthcare. That was an amazing stat I saw today. But for the developed world, and I'll just say again about the American economy, is that when 60% of your people are getting a monthly check, another 30% of the people have essentially 401ks, et cetera, and are retiring. Remember, the people my age who are retiring, I will never retire because what do I do? What would I do? Have got a 401k, have a Roth IRA that if when I start pulling money out of it, costs no taxes whatsoever. Our parents didn't have that. There was a cycle of spending that really dropped when they retired. But now somebody from the top 20, 30%, when they retire, is either going to be semi-retired working from home, retired, and chasing girls down in New Orleans, or the world, and gets a freaking check every month that would choke a horse from their Roth, from their 401k, from their IRA, from their corporate pension. And so it's a different world now. And I think that's why the economy is so resilient and why the Fed was so freaking wrong to think that you could pour $8 trillion of cash into the system and after a pandemic and create the great product inflation. Well, that is deflation now, Todd. We're actually seeing deflation.
We are. So Rhys, Spouting Rock talks to the most notable money management firms on Wall Street. You guys have an incredible history, very seasoned history. And so what are you in those circles of conversations? What are the conversations? What are the topics that are coming up? Is it a deflationary environment people are concerned about? Maybe an earnings cycle issue that we might have? I mean, because I got to say, right now, it seems like everything's great, except we have the Fed, it's uncertainty. We have the Ukrainian war with Russia is an uncertainty. But I didn't realize that the Taiwan election next year, it's amazing. But there's really not a lot of stuff right now that's going to signal to me that we have to be concerned. But what are the circles that you're experiencing? What are the people saying with you and your team?
Well, I think I do think there's some things, other things you need to think about, but I'm not that bearish. I mean, I'm pretty bullish, like Todd. I believe that in general, probably the winds at our back here. Getting to Goldman, which he asked about earlier, clearly they're lowering expectations in a major way, but there hasn't been an IPO in a year and a half, right? So that's a disaster. And by the way, there's this woman named Lena Khan in Washington who's preventing M&As from going through.
That's true.
That's a big part of Goldman's business too. So, one could say that there's nothing that's secularly wrong with Goldman Sachs. They are just in the wrong cyclical parts of the investment banking world. And so I just think, Goldman might be interesting. We don't own the stock, but we might be interesting longer term because it is a great franchise and they're very cyclically depressed earnings businesses. And then they're getting rid of the stuff they shouldn't have been in anyway, which was Marcus.
What's the story? I mean, Toby, let me jump in here on the Marcus. I want to follow up with that. What will they do with it though? I mean, are you going to tell your savings account clients that, okay, you got to take all of your money out, or I mean, are they just going to try to sell it for pennies on the dollar?
They're going to sell the accounts, Todd. They're going to sell the accounts to somebody who's actually in the consumer freaking finance business, and they'll get pennies on the dollar for those accounts. But that happens all the time. It was just Goldman. Look at when I see Patrick Cantlay, one of my favorite golfers, with the Goldman hat on, and then the Marcus logo. That was the only market I ever saw for Marcus, was a golfer. Their consumer market, they had no business being consumer marketing. And frankly, I think their CEO, you can tie him back to at least 3 bad decisions. I wouldn't be surprised to see him take off and go out to his restaurant in the Hamptons, I guess, that he owns.
Well, I mean, I think that was a Lloyd Blankfein thing when they put that together. And plus the collaboration with Apple, I wonder if that's just something they're looking to cut as well. It'll be really interesting. I think a lot of those questions are going to be asked on the earnings call on Wednesday, and we'll hear a little bit more about it. But overall, though, Rhys is right. There hasn't been a lot of M&A activity, especially from the environment out of Washington. Be interesting to see how things play out.
Hey, Rhys, what are you buying? What are you buying, Rhys?
I can't say that.
Oh, you can't. Oh, okay. I'm sorry. Unscrew you.
I can say off the record if you. I'll be happy to talk to you off camera about what I'm buying.
We'll go offline.
Then you can do the opposite and make a lot of money.
Let me add. Well, Rhys, let's go to that though. For one thing, can you give the audience maybe some industry sectors that maybe we could focus on?
Sure. We can do that. And we do own some of these big tech names, and I still think obviously we're not early, but those I think continue to work. And to I think Todd's point earlier, they've just recovered sort of not even what they lost last year. They're still they're not at 52-week highs. Several of them. I'm not going to mention individual names, but several of them aren't. And so in general area, it's pretty good. And I think AI, we've got a good exposure there. We talked a little bit about that, but it feels like the 3rd inning there. I don't think this is 1999 again. And I would imagine AI is going to be big enough that it will be 1999 again before this is all over, and we'll get some. We'll have some crazy IPO cycle and people will be justifying things on eyeballs again, just because that's human nature. It's been 20 plus years and 23 years, 24 years, and we haven't bought things on eyeballs recently. So we'll buy that. We'll do that again before it's all over.
How about home builders, Rhys? The sector.
I mean, to your point, if you want to move, you can't find an existing house. So home builders are in a good spot, despite the fact where interest rates are. I do think there's some level of interest rate that people say no mas. And, but we're not there yet, clearly, because the only people moving are those that have to move, not that want to move. Well, and the other thing that will help, I think, that will help the reconstruction stocks or the building construction stocks is, the Home Depots and the Lowe's of the world is people, if people can't move, they'll spruce up their house a little bit.
Well, the other one that gets me is if you take the, $440 billion CHIP Act, and then you take the Inflation Reduction Act. I still can't say that without smiling. Which is a green energy at about 1.6 trillion when you take the green bonds and the cash. Shockingly, what's hitting 52-week highs? Oh, aluminum, steel, infrastructure. We have a plant out here that's being built for $42 billion for just one fab for Taiwan Semiconductor. And then when you have a semiconductor plant, you have to have a hydrogen plant, you have to have a chemical plant, you have to have all the attendant stuff. They're bringing in 18,000 new people to live. God knows how they need to invent a water machine, I think, to actually make that happen out here. But I've never seen an economy that has so many legs underneath it at the same time. And yet almost every Wall Street analyst has been saying for the last 6 months, oh, it's a recession. Oh, and by the way, the dollar has come down so much that gold is outperforming tech this week and silver is outperforming. What does that say, Rhys, when gold and silver are outperforming?
Finally outperforming. Yeah, it's been a while. Well, I guess Bitcoin's also had a huge move, and I think that's part of that whole thing. And I mean, on the dollar, I do think it's interesting, and maybe this whole geopolitical thing is hurting the dollar a little bit because you have you did confiscate Russia's money. And so that tells everybody that's potentially doing something that the U.S. government might not like, not to keep too many dollars, because they might not be yours. You might just be leasing dollars. So I do think that's a
interesting
longer term issue for the dollar. And if the dollar weakens over time, that's good for gold, that's good for silver,
Yeah,
it's good for Bitcoin.
yeah,
that's a great soundbite.
Todd, we have a fund, GLDI is the ticker symbol, and it's a leveraged fund that owns gold. They have the same one that's USOI, that's oil. We're getting 31% yields off of these things because they sell options, right? And we've been doing that for the last 3 or 4 months on oil. But oil is also telling us a story. When you take 1.5 million barrels out from Saudi, you take another 500,000 a day, and that's starting August 1st. And you got jets taking off, and you got people on the freaking road. Oh my Lord, don't get me started on that. Our consumption is up on gasoline. Our storage is down. So we're actually bullish on oil.
And that's the one area, getting back to areas of the market that hasn't worked, is energy, right?
Yeah, absolutely.
It was great last year, but it's been terrible this year.
Yep.
And despite all the cuts that Saudi's announced and Russia's announced, and demand has actually been better than expected, oil price has been disappointing, frankly. And I do think that is one area that over time, there's not a lot of $60 oil out there to find.
Right.
So I think there is a put. And that will be just a lack of supply if the oil price keeps coming down. And also the U.S. government needs to put more back into storage, right? I mean, one of the reasons the oil got where it was is because the U.S. government was aggressive seller of the oil they had in the SDI, and that's all going to come back in the next few years.
Yeah, that's the only great trade I've ever seen America do. Bought a bunch of oil for $20 and $30 a barrel, sold it for 60, 70, 80.
Good. Yeah,
amazing.
80, 90, exactly. But they got to buy it back now, right? So you got to do that twice. So we'll see if they'll get that right.
The Capitol Hill traders.
Told Uncle Joe about that. He was like, we can make money like crazy here. Well, Joe, we got to buy it.
Oh my goodness. Well, gentlemen, let's leave it there. Once we turn that corner around to the politics talk, we might want to just stop it right there. So, but listen, so Rhys Williams, Chief Strategist from Spouting Rock Asset Management, thank you so much for joining us today on Buy, Hold, Sell. I know the audience got a tremendous amount of knowledge.
Very much enjoyed it. Thank you.
And we really do appreciate you taking the time. And on behalf of Tobin Smith, I am Todd Schoenberger. We want to wish everyone a wonderful weekend. And we'll be back next week with another Buy, Hold, Sell. Take care.